Well, there's a lot of stock-specific action to track for you today, and we'll get to that in just a bit. In our special Top 10 segment, we're looking at Lupin, Petronet LNG, Narayana Health. Those are stocks that are in focus on the back of positive news flow, while we have Tata Motors, Pidilite, Pyramid Enterprises, Deepak Nitrite, Star Health, Axis Bank, as well as Nykaa. They are stocks that will be reacting to some negative news flow.
All right, so that's a list of stocks to watch. Suresh Tantia is a senior investment strategist at Credit Suisse, and he's joining us now to take some questions. Suresh, good to have you with us here. Thank you very much. So we get one more monthly inflation print out of the US. How pivotal will that be in deciding Fed pricing and trajectory for risk assets from here?
I think today's inflation number will be very important because in the past 2 months, markets have been disappointed. Markets were looking for a peak in inflation, but that didn't materialize. Going forward, I think the trend is clear. Numbers will be lower, but the focus will be more on the components of inflation. What we're going to see is that some of the components such as second-hand car prices or the commodity prices inflation could come down. But at the same time, rentals and the labor market tightness is going to keep the inflation sticky. So I don't think today's inflation number is going to change Fed's trajectory in terms of the December rate hike. It's more or less given that they're going to hike by 50 basis points and end the US terminal rate sometime in the first half of next year around 5%.
So, Suresh, hi, good morning, and thanks for speaking to CNBC TV 18. Your thoughts on how to approach a market like India? It's roaring out here. The money is coming in thick and fast. We're virtually at all-time highs. When you get dips like this, some caution in global markets, is it a good time to buy in?
India has been absolutely amazing given the strong performance this year, despite 20% plus sell-off that we have seen in emerging market year to date. I think it's driven by the fundamental strength of Indian economy, more domestic-driven economy, and the recovery from the COVID. But at these kind of valuation, I think the room for further outperformance is very limited. If you look across the region, the valuations are very attractive in markets like Korea, Taiwan, China. Even some of the South Asian markets are looking more attractive. So from an absolute perspective, yes, I think India can do well given the strong recovery. But from a relative perspective, I see better value in rest of the Asian markets.
So, Suresh, just to confirm that, you believe that we are at the upper end of our range, and taking some money off the table for the Indian markets will be prudent?
It's quite likely that you see profit booking taking place at these kind of levels, especially with the Nifty at above 18,000 level and price to earning ratio above 18. But if you see 5 to 10% kind of correction, I think you will see a dip, buy on dip mentality taking place given the strong fundamentals. So I won't be surprised to see some profit booking, but again, buy on dip on 5 to 10% correction.
Okay, all right, we will leave it at that. Suresh, thanks a lot for joining in and giving us a quick call. So there could be profit taking, but buy on dips if there's a 5 to 10% correction is something that's prudent to do, especially for the Indian markets. Let's slip into a quick break. So many stocks to talk about. It's the fag end of the earnings season. Our list of top 10 stocks lined up next. Stay with us.